You think that crypto culture is powerful to aggregate capital? Wait until 100,000 Morgan Stanley brokers are out there on the golf courses pushing these mean reversion trades for these baskets of altcoins.
Here's my prediction. Altcoins will have a negative return as a space in 2026.
I'm concerned that there's going to be the mother of all hacks next year.
Is the Trump administration, I know they're pro-crypto, are they pro-DeFi?
I think AI is still crypto in 2022. You have people being like, all right, welcome everyone to another episode of Bits and Bips. This will be our last one for the year of 2025. Today, I'm your host, Austin Campbell, the high scholar of zero knowledge consulting. I'm here with my usual co-conspirator, Chris Perkins, the golden hand of Coin Fund. And today we are joined by John D'Agostino of Coinbase. And I've got to stop here momentarily to say I am super happy to have John on, specifically because we have previously had a number of connections doing research in this space, presenting things in front of Congress. And if you learn nothing else from this episode, John is one of the people that actually brings data and knows what he's talking about to this debate. So everybody should follow this guy. Now, on that note, disclaimers first. Nothing we say here is investment advice. And in general, don't take investment advice solely for podcasts. Check unchainedcrypto.com, Bits and Bips, for more disclosures. And we'll get to predictions right after a word from some sponsors.
You're about to make a trade. Which you do you listen to? Is it get optioning those options? Or let's do a little research. Learn more at finra.org/trade-smart.
Mantle is launching the Global Hackathon 2025 to accelerate the future of real-world assets. With a $150,000 prize pool, backing from a $4 billion treasury, and direct access to Bybit's 7 million plus users, this is the ultimate ecosystem for builders.
All right. Welcome back, everybody. I promised you some predictions, so let's start with those and get moving off the ground. Chris, myself, and John have not shared these with each other beforehand. So one, there's a non-zero chance that we either predict the same thing or directly oppose things, which will be hilarious. But two, you will get our genuine reactions. We have not shared these as of yet. So Chris, I'm going to give you the choice. Do you want to go first or do you want to pick one of us to go first?
I think we should have the guest go first. I mean, he's here. We have to give him the honors, right?
Works for me.
Okay. All right. I'm gonna dive in with a juicy one for you, Austin. So a major global brand, its own economic system. So think Disney, Amazon, something like that, which powers its own kind of tightly coiled, sticky economic system, will announce a stablecoin in 2026. So you will not be able to, though it'll be optional, you'll be able to use fiat, but you will be strongly encouraged to use either Amazon or Disney or Netflix's or some other economic systems stablecoin as value transfer within that system. And we'll see how sticky their brand actually is. Might be Temu, I'm not sure. That's my first one.
John, you didn't mention X, Twitter.
It's in there. It's in there.
All right.
I just know how is the way you engage with X value transfer. I think it has to be a brand where value transfer is the core of its economic model, and versus data transfer. And we'll see if people are willing to deal with the friction associated with moving into stables writ large, not crypto natives, to stay in that economic system or reap the benefits of it.
So is this a front to back, like building their own infrastructure, getting their own,
No, they're going to use Coinbase. They're gonna
seriously, are they going to? Is it white label or is it like
they're going to outsource it? They're definitely outsource it.
Yeah, well, I was going to pile in to say I think legally they have to outsource it, right? Like if you read Genius, these companies are technically prohibited from launching their own stablecoins if you're not a financial services company. But that doesn't say anything, John, to your point about, say, take Starbucks, for example, right? As somebody who's dabbled in crypto in the past, they could easily go to a Coinbase, like a Circle or like a PayPal and simply adopt the stable coin that somebody else has, like maybe put their name and brand on the front of it, But if you're not legally running the thing, like you're not managing the reserves, you're not handling the payments, then it's probably kosher under Genius because they have a very clear definition of what the issuer is. And so to unravel this a little bit, maybe for people who are not familiar with US payments, when you currently go to somewhere like the deli and you tap a card to pay, there are like 3 to 4 different people taking a cut out of that thing, depending on what you've done, right? Like you have the issuing bank, you have the acquiring bank, and you have the card network itself, all taking money out of that. And I say 4 because sometimes they're also paying rewards back to the consumer, depending upon the card. And those margins for retailers are significant. Those could be 2 to 3 percentage points easily. And look, for somebody who's selling like extremely high value legal services, like that margin is kind of irrelevant. But for somebody who's an extremely high turnover business, like John, I believe you referenced Amazon, where their margins can be low single digit percentage points, capturing any portion of that is transformative for the business. So if we're thinking about core economic drivers, I agree with you. Counterpoint, I want to throw this back to the two of you. Do you think that is actually a 2026 line item, or is this the classic case of getting a UI UX people will adopt, getting everything buttoned down, getting everything implemented, will push it into 27?
So, John, I want to ask before we get to that, you guys just made a huge announcement about people being able to brand their own stablecoins using your kit. And is this what you're talking about, essentially, that business line taking off?
I think well, it's you can argue that, or you can argue that we felt the need to announce it because we see this coming, right? I think both are true, quite frankly. But Austin, to your point, the safe bet is that it'll believe. I guess I'll refine it by saying the announcement will happen in 2026. Whether implementation can occur in 26, I'm not sure. But I think you're right. I think that'll take longer. So unless it's a Q1 announcement, I don't think we see it go live by Q4. But I'll stand by an announcement in 2026.
I totally agree with you, John. I think it's a no-brainer. I talked about it last week. Stablecoins are the new net interest income. Today you're not making money on those payments, and someone's capturing that interest. If I imagine as you start issuing your stablecoin, you're going to capture a share of the net interest income. It makes sense for any business model you're in. So, I totally agree. I guess to me, this is just an obvious, next step in the industry, like very, very linear. We all knew this was coming. So I think the question is timing. So my question then is my first prediction, how big is the stablecoin market by the end of the year next year?
That's a question, not a prediction.
I have my number, but I want to know yours.
You can't offload your prediction.
I want guess who first.
I just gave you my number.
Chris is in the eternal trader move of no, you make the market first.
I'll give you my number. My number I think is a little bit weak, but I'm going with 600 billion, which is about, I called 500 this year. I was wrong. We ended up around 310. Austin, correct me if I'm wrong. 310 billion. I think it doubles next year. I'm just going to round it and say 600 billion. I think years after that, it goes vertical, but I'm being a little bit weak, I think, this year, saying 600 billion by the end of next year. Thoughts?
My number for the end of next year, what we would traditionally call stable coins today, is probably about 500 billion. But the lurking variable within that is we don't know what's going to happen with people potentially tokenizing their own balance sheets. And that number for some of these things can be exponentially big. Right? Like, good example. If one of the big 4 banks says, we're just moving to a 24/7 collateral system, it just tokenizes all the collateral in there. Stable coins, if we're defining that as like the money object, that being like T-bills, a tokenized deposit, could easily be over $1 trillion, right? With one flip of a switch, just because of how people essentially run their internal ledger. So to me, the problem there is a definitional one. Chris, of like, what do we mean when we say stable coins? Like, are tokenized bills on Onyx or Connexus or whatever JP Morgan is calling it now stable coins? Because if so, that number could be trillion.
Well, I'll up you there. Is Athena a stable coin? I think we agree that it's not. It's a tokenized basis trade. So I would say fully backed, obviously Genius compliant, which Genius doesn't even go into effect until January 27, or latest, I guess. But like I'm thinking about like truly backed stable coins like the Tethers, the Circles, and similar folks, not just Genius compliant. I don't think you include tokenized bank deposits in that number. That's a separate product. As our friend Omen Malakin says, it is a receipt on a fractional bank, which is not a stable coin. So yeah, I think it's
I might counter that Genius says otherwise, given that bank deposits are one of the assets within Genius. Like, so this is going down the rabbit hole of why I.
Yes, that. Let's meet on that.
Yeah.
We agree with me on that. I think bank deposits are stable. That would be tokenized bank deposits would be stable coins. Also, do you think we're not?
Well, so here's kind of the hilarious thing that I've been pointing out to some of the bank people who've been lobbying for an even harder yield ban is I'm like, you guys realize that tokenized bank deposits are stable coins under Genius, so you're arguing to ban your own ability to pay your customers. Right. And so like, I didn't know the banking industry wanted Reg Q back that badly. That's news to me. But yeah, like, guys, tokenized bank deposits are a fully permissible asset under Genius, meaning I could have a stable coin filled with 100% tokenized bank deposits. So if I wrap my tokenized bank deposit, put it on a blockchain, in a literal sense, that is probably a Genius stable coin. So like all you banks with tokenized deposits out there, think very hard about what you're saying as you talk about these things, because if you break that, and now you want to tokenize your derivatives collateral, but you can't pay the interest on it anymore, you can't use your blockchains.
all right. So we just really confused everybody.
Yeah, that was
just
the thing.
Let me give a super stablecoin hot take. That is my first prediction. If everybody is ready for that, U.S. dollar stablecoins will be completely banned in at least one major foreign nation in 2026.
Oh, come on, that's obvious as well.
Is it?
U.S. dollar.
I think so. Like, I mean, this is one of the big challenges. We're already hearing, the BIS is concerned. How many, senior regulators, particularly coming out of Europe, are very nervous about dollar supremacy. Dollars are going to displace emerging markets. It's taking an avenue of control away from leaders that maybe shouldn't be leaders. I think this is a no-brainer, and I do think you're going to see dollar stablecoins banned.
Well, it's good. Let's take it further. So, Austin, would you refine it by saying, is this going to be a Eurozone country?
I think it's kind of the developing world.
I would say the Eurozone are the most likely sets of candidates because they seem super happy to get into a fight and attempt to ban technology in all forms right now. So yeah, probably Eurozone. My number two is China.
Ooh, that's super.
Right.
Yeah.
Again,
And I also think across the developing world, like Africa, it's gonna, it's hard, but it's.
I'm not sure from a currency standpoint I would classify anybody in Africa as a major player. Brazil would count.
Fair enough. Yep.
But my punchline is, I think somebody would call it the G12-ish range is going to ban U.S. dollar stablecoins because exactly, Chris, as you got to, these things give their citizens a way to get out of the local system and hold dollars instead, which is not just important for the FX. That part matters. In fact, it matters even more in the developing world. But equally so, it gives people a way to get out from like legal norms and rule of law. Because let's say I'm in Europe and I say a bunch of things that people don't like and they want to hit me with a massive fine under some of their essentially anti-free speech laws. Well, if all of my money is in a dollar stablecoin, do you think a U.S. court is going to be responsive to that under speech grounds? Probably not. And that sort of like challenge to sovereignty, I think that people are going to essentially, a little bit like what's going on with speech, have a reckoning with how the internet actually works. Which is to say, if I'm in, let's pick a country, Germany, do I get to tell the Americans how the internet works in America just because a German used it?
I think if the argument is protection against capital flight, I think there's a higher probability of China doing it than Eurozone.
That's where the China prediction comes in. Yeah.
Yeah. I mean, that's if China does that, then I think the probability of them either soft or hard moving on Taiwan goes up materially in sync with that. I mean, that's a total rejection of bilateral monetary relations. And then I think the probability of it, I was thinking about that being one of my predictions, that China does a soft or hard move on Taiwan in 2026. I backed off on it because I think they're going to wait until our chips manufacturing is at a point where us retaliating doesn't make economic sense. But I think I'll add to yours. If they do what you just said they'll do, I think they move on Taiwan in sync.
I mean, certainly what's the right way to say this? My prediction is premised upon decreasing global coordination across all major nations, which has now been a multi-year view.
Yep.
Basically, since COVID, that has been ongoing. Yeah, deglobalization. Well, not just deglobalization, but also desynchronization, right? It's not just we're doing less with each other, it's also we disagree with each other more. And I think that is a point that has maybe been underpriced in markets generally, and dollar dominance is terrifying to a lot of people who would like to do that, exactly as Europe's economy is hollowing out. So, all right, Chris.
Yeah, that's what disagreeing with each other. We're too much in sync. Come on.
Yeah, all right. This one is kind of related, actually, fellas. I'm concerned that there's going to be the mother of all hacks next year. It's going to be greater than $2 billion in size. It's probably going to be by our friends in North Korea, and it's going to lead to a material downturn, drawdown, and it's going to require a complete policy rethink. I'll give you some stats. This year, looks like we're closing out the year with 3.4 billion. It's a 51% increase. Remember the Bybit hack kicked the year off at 1.5. So, I don't like to say it, but it's something that keeps me awake at night. And I say it because I think we all need to be thinking about it. It's the one thing that's going to derail. Like, we have so many good things coming together, except for price, but it's the one thing that like keeps me awake at night. John, I know that you guys just sorted through that $400 million issue you had. I don't know. I hate to start with bearish themes, but that's one thing that I'm worried about. Some hack greater than 2 billion, forcing a major rethink.
So let me agree and disagree with you. So I agree with you that there's a high probability of a major hack occurring. People are really underestimating the importance of having a nation state backed group like the Lazarus Group that is able to act with impunity. I mean, when I was reading about them recently, I called up my buddies at MIT and I was like, hey, are they just smarter than everyone? And they were like, no, they're like, they just get to act with impunity. Like they're nation state backed. They don't have to worry about getting arrested. Obviously, we have hackers in the NSA, but I don't think our hackers are trying to kill specific companies and rob money. So they're the only large-scale nation-state backed hacking group that has the support of the government. So I'll agree with you there. High probability of a big value money hack. I disagree with you that a money hack will disrupt much. What I think disrupts more are hacks like the Panama Papers, where information about, so if the hack includes data and information about people using crypto in nefarious ways, not just loss of value, then I think we have a big structural problem. If it's just people lose lose money, we're not a sympathetic audience. Let's be honest.
Yeah.
Nobody cares if crypto.
But we also have trillions coming on chain, and that's the difference. Is, as you have the.
So I agree. If it's moms and pops and dentists and doctors who are touching crypto for the first time, then it's a problem. If it's a hack that information of nefarious activity is revealed, then it's a problem. If it's just a bunch of crypto natives having the Bitcoin stolen,
nobody cares. Nobody cares. But I think that's the problem. Yeah.
It would have to be one of two kinds of hacks for this prediction to be true. One is, for instance, one of the big ETFs, right? Like if everything gets stolen from like IBIT or FBTC, that is an existential event.
Dentist, I agree.
The other one would be somebody actually compromises the smart contract keys for one of the major stablecoin issuers. Because like if I hijack Tether and could just mint 3 trillion of Tether and go buy everything, right? Like you have a very big problem. In fact, back to Omid, he and I had this debate on Bankless at one point where I was saying, I do not think the current crypto market infrastructure works for tokenized real assets because we've created a huge single point of failure on issuer security, right? Because like, I want to be clear. I think they have very good security, but if somebody compromises Tether's smart contract keys, now what?
Yeah.
Right.
All right. That's my last bearish one of the day.
Well, so I want to, what's the right way to say this? Take that in the opposite direction to throw one out. Then we'll go back to John. Part of what many of these discussions reveal is that these issues are vastly more complex than people realize. And as you start, call it descending down the stairs, it's like, oh, I'm in the basement, and then basement level 2, and then basement level 3, and then basement. How many basements are there? So one of my predictions for 2026 is clarity will not pass in the United States. And I think it will not pass because as Congress continues to educate itself here, this stuff is just way too complicated.
John?
I think if it doesn't pass, it will not be. I'm trying to disagree, but Austin knows Team better than me. But I do think this. I think that if it doesn't pass, it's not because it's too complex, because I think they pass things they don't understand all the time. I think if I were to agree with Austin and not passing, I think it's because the Democrats have momentum right now, and I think serious momentum. And in fact, I was interviewed about 2-3 weeks ago, and I was asked about the price action in crypto, and I said the only thing I see that's different between now and 2-3 months ago is growing confidence in Democratic momentum down in DC. So I'll say I tentatively, I won't disagree with Austin because I just don't know the political scene as well. I hope that's not true. But if it is true, I think it's going to be because of shifting political momentum, not necessarily because for the first time ever, politicians have decided they need to be thoughtful and understand a policy before they enact.
Yeah, I think that's becoming consensus, Austin, on clarity that it probably won't. We're pretty much assured it's not going to get passed before midterms. Question is does it get passed after midterms? I don't know, man. I agree with you. Having been in DC, in and around DC long enough, it's just a super complex bill, John. Not because of the policy's not complex, the power is complex, because you're moving power from ag to banking to ag. It just makes it a lot harder. And we saw how hard Genius was. So I tend to agree. I think the question that I would come back to you with, Professor, would be modular, right? Instead of getting one big, beautiful Clarity Act, are we going to get pieces of it? Are we going to get, are we going to break it up? We asked Patrick on that, Patrick Witt at the White House, and he said, we're not considering that yet. There's probably going to be a time when they pivot to modularity. Do you think that's possible? And if so, is a taxonomy that we focus on?
Yeah, I would say, one, I will remind everybody that the White House said that we're not separating market structure from genius until they realized, well, we could definitely get genius, and if we attach it to market structure, it's not going anywhere. That was when you make that deal. So I do think there's a chance you do that. I would tell you, I think the least controversial part of clarity is actually the taxonomy. I know a lot of people in crypto have views about it, but there's something in there that is good enough that Congress could get to that I think we don't have a problem with. I think the parts where there's going to be like really severe heartburn and the political dynamics get exceptionally gnarly are around how do we define DeFi? Like, what is that? What is control? Where do we draw the boundaries? And I would tell you, I don't think there's consensus there. And part of my complexity one is, you had people propose some things that facially were like, oh, we think this works and it's simple. And then you get things coming in horizontally to the debate that you didn't even expect. Like, what do you do when a web browser company suddenly shows up and goes, wait, why the fuck do you think we're a money transmitter? And they're like, well, we didn't mean that at all. And they're like, that is what you wrote down. And then the whole debate, the wheels just come off. So I think DeFi is going to be really hard because step one is what do you think you mean when you say DeFi is a very complicated process. Two, the AML KYC debate is broken, right? And I say that because you have the banking faction who wants everybody to have to KYC everything, not because they think it's the right policy, but because that's the best way to protect their current walled garden, is force other people to like hammer into that shape so that you can't do new things that they're not intermediating. You have a bunch of, I'm going to call it crypto natives, who don't want KYC at all and are strongly opposed to all of these things. And then I would say you have a bunch of like tech and intelligence people who are like, actually, we like blockchains for open source intelligence reasons, and maybe we should KYC less things, but have more information transparency. And all three of those groups disagree with each other. And none of them, I would say, have a majority opinion, right? And so that makes it very hard to move that bill because we can't set an AML KYC standard for interacting with things on chain, right? Like that just becomes an absolute blocker. So if you're thinking of modularity, the token standards, I think, are pretty doable. And any requirements you're going to attract or like attach to, call it centralized entities like Coinbase, the exchange, for instance, or like crypto custodians, probably more in the realm of doable.
Yeah, the AML KYC, I agree with you. It's becoming increasingly intractable. There's a wide disconnect. I see. It's funny. I flew to Dubai a couple weeks ago, and for the first time ever, I didn't take my passport out of my luggage the entire trip. I did biometrics in the U.S. I've been doing it for years in the UAE, but the first time ever came through U.S., went through global entry, en route back, pure biometrics. So I was shocked at the market jump in modernization of TSA AML KYC, know your citizen at least. And it seems like, and Austin, you're the first person to put it this way. I was wondering why sort of the traditional financial sectors had stayed so analog, remained so analog around it. By the way, it's not just the US. I sit on Cayman boards. I have to go to notaries a couple times a month. It's an unbelievably arduous process. And you're the first person, Austin, to kind of point out the obvious, which is that that's a feature, not a bug, of protecting that moat. So that it seems like we're a long way off, just philosophically, from being comfortable with it, and then the technology has to catch up. So I tend to agree that we're not going to cross the AML KYC hurdle here in the U.S. for a very long time.
I think, and Chris, I would be super curious about your opinion on this, but I'll say it this way. I actually think the divide that will eventually break that logjam is not between the crypto people and the banking industry. It is between the national security people and the banking industry, where enough NatSec people are going to get annoyed at how analog this is and how hard it is to see things while they see things like Lazarus happening. That it's one thing for you to be a bank executive in Washington arguing, well, those crypto people are untrustworthy. Look at all those scammers. Like, why would you let them set the standards? Fine. Very different argument to have, like, oh, I don't know, senior folks from the intelligence agencies on the other side of the table saying, actually, you guys are damaging U.S. national security by not doing a good job with this information. Those are two very different problems.
Yeah, I tend to agree. I think DeFi is going to be really hard to get done. So they're going to probably have to carve it out. The other issue that we didn't talk about was two other issues that are stopping it from going. We talked about in the past. They just hate Trump and they don't want to give him anything. And, ethically, they want to address ethics, big problem, and then stablecoin interest. So, yeah, I'm with you on that prediction.
Is the Trump administration, I know they're pro crypto, are they pro DeFi specifically? Is that nuance teased out in your understanding?
I don't think there's coherent, I guess, focus on DeFi. There's a lot of agendas. In and around how that policy should work. I think if you talk to the executive office and like the Patrick Ricks of the world, they get it. They want to make it work in a thoughtful way. But I think there's a lot of agendas, both Republican and Democrat.
I would also say, if I want to steelman the Democratic view on that, for the informed ones, their objection really is more around things like world liberty than specifically CeFi or DeFi. Like, if you want to read into the Democratic thinking of the informed people, go read the text of what Representative Torres proposed for an anti-corruption amendment, which is basically essentially, if you're a federal legislator, executive branch senior employee, or anybody in the judiciary, you just can't be involved with this stuff, period, full stop. And then there's also an attachment to family members, which, I'll be transparent, I've given them feedback that's way too overbroad, but you could definitely put a thing in there about like acting in concert or delivering benefit to. You can't just capture all family members, because like if a senator has a brother who hates him and that guy gets elected to the Senate, you can't ban that guy's activities.
Yeah, it seems like we'll have kind of clarity around how we expect our politicians to engage with crypto faster than we'll have clarity around how we expect our politicians to engage with the stock or credit markets. Like that's kind of funny, right? I mean, because as my understanding is there are not clear rules, right? Which is why the Republicans accuse the Democrats of front running markets, and the Pelosi indicator and all this. And I know there's shenanigans that go on, but I'm sympathetic because it doesn't appear that as a society we have codified rules around how we expect our government officials to engage with capital markets. So it's funny that we're going to lean with crypto. That's
what we've been telling him. Yeah, you got an ethics issue, but it's not a crypto issue. It's an ethics issue. Address it across products. And another good reason to maybe modularize things.
I'll tell you right now, I think it would be a hugely positive thing for the United States to just have a generic, like, federal and congressional sort of ethics bill around all of this stuff, because it shouldn't be the case that somebody can launch the Nancy Pelosi ETF and massively beat the market, right? Like something is wrong there when that's happening.
It is kind of weird. I mean, every company I've ever worked for has pretty clear personal trading rules. Like, it's not like there's not enormous precedent around this. Just, go grab whatever Goldman Sachs is doing and just implement it for Congress and Senate. But but crypto will lead the way. That's wonderful. Regulatory clarity for equity and credit vis-a-vis crypto.
All right, let's John, let's do one more prediction of yours, and then we're gonna have to do one more roll of ads before we keep arguing.
I have an anti-prediction, meaning I'm going against Twitter conspiracy consensus, and I will say none of these three things will occur in 2026. It's a prediction because everyone seems to think they will. So none of these things will happen. We will not achieve AI general intelligence. Quantum computing will not be a scalable, viable threat to crypto or any form of any form of substantive crypto cybersecurity. And alien life will not be confirmed. Those are my three countercultural predictions from at least the Twitter algorithm. But my algorithm is full of people claiming this is absolutely certain. None of it's going to happen. Deal with it.
All right. Well, I am on the record as being a pretty deep AGI skeptic, saying I think people are misunderstanding how these models work. So I am definitely on board with that one, right? Like I think the problem we have with the AI debate right now actually is a little bit like the problem we were having with the crypto debate in 2022, which is to say you have people making fantastical claims that this thing will reinvent every single thing in the world and replace everything forever, always. And other people saying it's a flaming tire fire that will destroy humanity, and with nobody in the middle or with a nuanced view other than like tens of people at the time. And I actually think a lot of that is washed out in crypto, and we're starting to have more granular discussions, which is good, but it took us like 4-ish years to get there. I think AI is still crypto in 2022. You have people being like, AI will run everything. Agents will do everything. There will be no jobs. Like, it's all over. And then you have people on the other side being like, essentially the Paul Krugman, like, I don't see how this is better than the fax machine type critique. And the truth is somewhere in the middle, which is like, if you understand the functional process of an LLM, there are certain kinds of brute force tasks that are not super accuracy demanding where they're incredibly powerful, like incredibly powerful. They will have transformative effects in those spaces. They are very good at some levels of heuristics. They're very good at being approximately right. And they're very good at doing that at scale and finding connections between data sets that might not have otherwise been found. But the idea that you can take that, which is essentially, call it a scaled sort of like super librarian, if you will, and generate totally new forms of intelligence from it, like citation needed. That's the old math gag of like, first this happens, then a miracle happens, then this happens. It's like citation needed for this step, guys. Right. And I'll just say, if people want to send it to me, great, but I've seen no evidence so far that any of the LLMs are falsifying the prediction of it gets harder to get gains as they get better. And while they're very good at finding links between data sets, they are not good at generating wholly new data or new ideas. And you need that for AGI.
They're not creative. Yep.
I am excited about quantum. I'll be honest with you. I've been starting to dig into it a bit. And I think when you bring AI together with quantum, you're going to be able to accelerate. People have been studying quantum for a long time. I think I was looking at Columbia the other day. They started in like 1909. They've had a Columbia program focused on quantum, but I think we're now starting to see some acceleration. And I don't think that, ubiquitous quantum capabilities are going to be online in the next year or so. But I think, as we get towards, a few years from now, 5 years out, it's good to start thinking about it now. Like other technologies, it's not going to be good or bad. It's going to unleash amazing compute, incredible iterative modeling. You're going to see a lot of diseases being cured that we didn't think were curable. And there's going to be some bad parts to it too. But I do think it's starting to accelerate. Not next year.
I mean, I think the other question with quantum, sort of back to John's maybe original point earlier about the hacks, is like, is Bitcoin really the thing we're worried about? Right? Like, if we can break encryption as we currently use it, there are much more valuable targets than Bitcoin. Like, This is sort of being like, I have created a device to become completely invisible, and I'm going to use it to steal candy from Target. And it's like, what are we doing?
Yeah, the analogy I keep thinking is it would be the equivalent of teleportation. Right. That would be it. So if tomorrow teleportation was a real scalable thing, then locks, doors, all types of physical security, everything goes away. Right. Our entire way of thinking about physical security is completely transformed. And the last thing we'll be worried about is I guess you worry about like theft, but you worry about personal physical safety, first and foremost. And so that's kind of where I think what I look at, I'm lucky to for AI, for AGI, I'm lucky to sit in this position where I'm a fellow at CSAIL at MIT, so I get to hear what they're saying, and it seems that for both qubit production on quantum and the way AI is growing, they're suffering from the same thing that I've seen every bad trader suffer from, which is this linear interpolation of recent trends. And it's like, maybe it's just beaten into me, Chris, and also because I've seen it, people fail in trading for so many years, just taking that short-term data trajectory and expanding it out. Like if that's true, the human beings be running a sub 1 second 100-yard dash. Correct. Right? But as we all know, it just gets increasingly harder to get that marginal unit of return. So I just see them falling into this, and then also the marketing gimmickry, and like also you mentioned before, like these two camps of it's going to change everything, it's going to kill us. I actually think those two extremes are towards the same marketing goal, because what better way to get you to invest in my thing than to say, oh my goodness, if we don't stop it, it's going to kill everyone, right? That's a very important thing that you absolutely need to invest in. So I think the fear mongering and the hopium are kind of the same silliness. And the end result is, like you said, which is massively transforming some industries, definitely transforming how we do certain things, freeing up time in some areas, increasing the amount of time we have to devote to other areas. But and I'm not a Paul Krugman on this at all, but this notion that, again, massive unemployment in the near term, in the next, like, let's say 3 years, beyond that, who the hell knows, is just kind of silly.
I mean, it's kind of like, as a final thought on that one before we flip to the ad, the personal computer did not destroy the economy. It may have transformed a lot of jobs. It changed how to do things. But like,
calculator did not,
accountants didn't vanish because of the personal computer. Mathematicians are not gone because of the calculator, right? It will just change how jobs work. So, all right, on that note, let us go to our ad roll here, and then we'll come back and argue about some more predictions.
Mantle has entered a new phase as the distribution layer connecting TradFi and on-chain liquidity. To accelerate this vision, the Mantle Global Hackathon 2025 is inviting developers to build scalable RWA and DeFi products. Why build on Mantle? It's an ecosystem built for builders. You get direct access to Bybit's 7 million plus users for potential listing exposure, support from the $4 billion Mantle treasury, and mentorship from top VCs like Spartan and Animoca brands. With 6 tracks prioritizing RWAs and RealFi, and a $150,000 prize pool plus grants, this is your chance to deploy on a high-performance modular L2. Register now. The link is in the show notes.
All right, welcome back. Chris, I'm going to counter your bearishness by hitting you with a prediction that is simultaneously bullish and bearish and will make a lot of our listeners mad. So here's my prediction. Altcoins, which I'm going to define as everything other than Bitcoin and ETH and stablecoins, before somebody yells at me about that, will have a negative return as a space in 2026. And that TradFi will capture way more of the value than many of the crypto native protocols.
Depends how you define it, right? So I think everyone agrees that alts are having a rough go. I think based on the index you used, they're down about 60% year over year, depending on your definitions of alts. We've always known that you can create tokens out of anything, and a lot of them have no worth. But I think you're right that there's going to be a return to fundamentals. I don't see, like, it's hard to group them into this huge monolithic group. You have to look at each project individually. What is its utility? And I think that discipline of looking at fundamentals is going to drive dispersion in the price and the value of these altcoins. So it's like easy to say alter this, alter that. I do think that you're going to see derivatives onshoring in 26. Remember, Gary Gensler, we talked about this. He forced all derivatives offshore. Next year is going to be a battleground for derivatives in the United States. And one of my predictions correlated to this, Austin, is that U.S. will gain market share. CME will lose market share onshore. Okay, like right now, I'd say, they're a very small part. I think they're just a tiny amount of the global volume, so we can go through them if we want. But I think they're going to face very, very tough competition from our friends at Coinbase. You're going to see the Asians marching in. I think Binance returns. I think OKX comes on strong. So it's going to be the battleground. Why is this related to alts? Because the alts with functional futures will win. Why? Because again, as we're seeing institutions enter the space, they need to be able to hedge. They need to be able to trade basis. That basis is going to be ETF versus future, DAT versus future, futures power alts. Alts with futures win. Bifurcation of value between the haves and the have-nots in the alt space.
I think part of the other problem, though, like as I'm looking at why I believe this, is two things. One, back to thinking about fundamentals. A lot of the design of tokens and protocols was a counter reaction to the nonsense from the SEC over the past 4-ish years under the Biden administration. But now we're starting to have a reckoning with the compromises that were made there as people can start operating. So look at the drama around Aave right now as an example, which is if we come to a place where it's actually the token doesn't really give you any meaningful rights and the revenue can just be taken away, then the appropriate price for most of these tokens is way lower, right? Way, way lower than it currently is. And the problem that you will run into is while crypto natives have had some sort of, call it, community / mythological / ethos belief around tokens, TradFi people don't share that. And so they're not going to be coming into this space and saying, hey, the way to do things is buy a giant stack of Aave and introduce governance. No, they're just going to build their own borrow-lent protocols. And so I think we're going to hit the rubber meeting the road on what is a token, what rights does it have. And I think for a lot of these things to survive, they're going to have to transform into much more equity-like instruments that grant people actual legal rights, right? Because again, the days of the, call it, valueless governance token are probably coming to an end. Now that and there's been a string of these, right? Aave is not the only one. Look at the Axelar takeout, right, by Circle. And you can see these things starting to emerge of the differential interests between the operating company and the token holders are really becoming an issue.
Okay, so I'm gonna hedge a little bit and say that I think everything but Bitcoin lumped into altcoins is a challenging heuristic. So Solana, I'm assuming, so you don't equate Solana with sort of a meme coin, I'm assuming, right? Or are we thinking of it?
I mean, I will tell you right now, the only thing I would confidently carve out there is ETH and the major stable coins. I think even if you include Solana in the space, it's probably a negative for the space.
Okay. So I'll disagree with you on Solana because I think that Solana is going to be the architecture for a major U.S. equities exchange to start experimenting with on-chain equities. I think they'll use Solana because, ironically, meme coins proved the resiliency of that infrastructure.
Okay, but hold on. I'm not disagreeing that will happen. I'm asking, does the value then accrue to the token?
I think it does, and not because you're not. I think you're right about the fundamental value. I think there's two other forces I think that are countering it. With three. One is just mean reversion. People love mean reversion trades. I think that's one thing. But for mean reversion trades to work, you need capital flows. I think there's going to be a full series of ETFs and access vehicles, and there'll be, for the first time ever, there'll be an army of brokers selling them and shilling them. And if you think that crypto culture is powerful to aggregate capital, wait until 100,000 Morgan Stanley brokers are out there on the golf courses pushing these mean reversion trades for these baskets of altcoins. The last thing is, and this is getting a little bit philosophical, but I've been spending a lot of time thinking about what Scott Galloway is going on about this growing nihilism amongst Gen X and Gen Z and Gen Alpha. And I'm seeing him. I do a lot of public speaking because this book that was written about me is really popular with college kids. So I've spoken to my nephew's fraternity, and I get 25, 30 college kids a month reach out to me because they still love this decade-old book. I sense it from my conversations with that generation. So I think that this, and if your members don't know, Scott Galloway and Scaramucci and others are talking about this problem affecting not just young men, but mostly young men who, summarized by financial nihilism, they believe that there's no that inflation beats interest. So this whole idea of saving and compounding, you cannot work your way out of a debasement, and therefore there's no hope. Even if you get a decent job, there's no hope. So you might as well just ape into some shot. You might as well just gamble away some shot. And he ties it to the sort of gamblification and financialization of all assets. And I think that's not going away in 2026. So I think you're going to see inflows into any beaten down asset class that's viewed as a potential 10x or 20x or mean reversion trade. And I think there'll be easier access vehicles for altcoins. And I think you'll see more nihilistic Gen Z heading into these trades. I think it's what's driving silver right now. I think the memification of 10 potential 10xers, I think that zeitgeist is not going away.
So, John, what's the next meme, man? What's the next memification?
Sober and thoughtful, triple tax-free bonds in New York State. Like that's.
I thought it was gonna be Coinbase equities. No, all right.
Sorry. Just one quick thing on that. So I hope that the Everything app, I hope it starts with high quality assets and then it filters down. I think people should be allowed to buy whatever they want, but I think if you lead with idiosyncratic, high volatility assets, you increase the probability of a micro or macro blow up in the building stages of that market, and then things get complicated. So I'm hoping for on-chain gold, on-chain crude oil, on-chain large cap US equities, on-chain Bitcoin, and then you get the benefit of that all at scale in one place.
Yeah. So Austin's saying that securities, he sees more value accrue to securities or security like properties, right?
That I agree with.
That's what you're saying. I don't agree with it.
Part of it is that, but part of it is also like, all right, so it's important to understand the mentality of some of the people here. I was having a late night discussion with a friend about nihilism recently, amusingly. And the important thing to understand is there's not a central meaning there when you're thinking about that. If you look at the behavior of like the financial nihilist sector, they just run around chasing the next hot thing, looking for wins. And sort of part of my thesis here with the altcoins is that's old and dead and gone, and I don't think it's coming back. Like, they're busy fucking around back again in like stocks or like prediction markets right now. And there's going to be something new that we can't predict, but it's not going to be, oh, we go back to that thing only like a year or two later. If those come back around, it will be many years later. That's how retro things work. And so I think part of it is the hot ball of money left alts, and it's probably not coming back to alts because that's not how hot balls of money work. And so when you combine that with the fact that all the people who would normally come in is like, oh, that thing's incredibly beaten down, I'm a value investor, let me go look into that, go, oh, like, is there any value here? Like, if you're a distressed person and you look at a lot of these tokens, you look at that and go, nah, that might be zero.
That's interesting. Okay.
So
alts are so 2025. They're just not again through.
It's not forever though. This stuff is cyclical. And again, like, I don't agree with value just accrues to the securities. And by the way, like, securities are no longer a death sentence, right? On the commodity side, it depends how valuable that commodity is and what is its utility, right? So I do think that you got to be a little bit more discerning. But I hear you. And I do think there's going to be a push into that the security-esque asset because we can now. We're not going to jail if we do it, right? All right.
Yeah, and that's part of the prediction is now that you can actually do securities, maybe you just want to do that sometimes.
All right. So I got another one. All right. So we had 21 was DeFi summer. I'm going to say 26 is M&A summer. M&A is going to be freaking everywhere. So this year, I think there's about 8.6 billion in M&A activity. John, you guys led the way with your acquisition of Deribit. Kraken did, Ninja Trader. I think this M&A is going to be so dynamic. You have a lot of new public company CEOs that want to go buy stuff. That's why they went public in the first place. You're going to have the DAT M&A, two different types of DAT M&A, DAT against DAT, right? You know, whether it's I'm buying a DAT of the same token or a different token, I'm going to dump it. Maybe that's one flavor, but I think a bigger flavor is DAT buying or merging or acquiring foundations and labs. That's the other M&A trend. So obvious to me. You got the trad into crypto M&A. If you're a trad player, many of them, they've ignored crypto for years because the regulators said, don't touch it or I'm going to get you. Now they're like, uh-oh, I got to catch up. So trad into crypto. And then you're going to have crypto into trad because people like Austin are saying you need to have those securities capabilities. You need to have that equity infrastructure. So going both directions. And then the last flavor is I see offshore coming onshore to buy things. Asian exchanges and players, you know, European perhaps coming onshore, where you're going to hear some CFIUS debates. But like, I think it's going to be M&A, M&A, and M&A in 26. What do you think?
So I think you're right about the DATs. I think the DATs, I'll add, I think the DATs that are in a position where they have any sort of lifeline, where they have a year or more of run rate and they have any capital available, they have to go by cash flow. Their business models are non-sustainable, right? They're burning for every, say, 100 million of assets, they're burning somewhere between $5 and $10 million a year to keep it up and running. Staking doesn't cover that. Staking, unless you can't go into the really risky stuff if you're a public DAT. So they're just non-economic. So I think you're right. They'll consolidate. I think the ones that can go out and get debt financing or have some capital left over from their de-SPACing or whatever it is they listed, they have to go buy EBITDA. Like that's actually go by cash flow. So you may see DATs buying like oddly normal analog businesses just to get cash flow to show, hey, I can be around over the next 5 years and become this access vehicle that you want me to become. Chris, real quick question back to you. All the other M&A stuff, is most of that distressed?
Oh, no, not necessarily at all. I think that there are people that are looking for the best companies, the best capabilities. I have buddies in traditional markets. They're like, come back to me when your company's making $100 million in revenue. I think the problem right now, frankly, is that there just aren't enough crypto companies that are capable of meeting the standards that need to be met. Like, that's the unfortunate truth. But the ones that are, they're either racing to go public or someone's going to try to scoop them up as soon as possible.
Well, so I think you hit on something important about M&A that a lot of TradFi people are not understanding really well. So if you're one of those, if you're listening to this, pay close attention. There are really only like 3 profiles right now that are potentially M&A-able, and one of them you're just not going to get, which is crypto companies that have done quite well are going public. If you look at the IPO valuations of like a Coinbase, a Circle, right? Like the people, even Bullish as an example, the people who have been able to IPO have by and large done very well, and they don't need to do an M&A transaction. They're going to go public, and then you're going to have to try to take them over in traditional capital markets. And so if something's got, call it 200 million of revenue and it's a crypto company, it should not sell to you. It should IPO. And so I think they face this problem of like, actually the public capital markets are probably a better buyer. 2 is companies that are specific types of strategic acquisitions. Like we have seen stablecoin startups like the Bridge and like, you know, sort of like BVNKs of the world being scooped up or potentially scooped up. That makes sense to me because that's a strategic bolt-on, but you're going to need to know what those are, which means you need to know what you're doing in blockchain space. And a lot of TradFi companies, quite frankly, are 10 years behind, right? Like if you're any of the like major financial or bank companies and you don't have a totally cracked team of people in this space already, and the 1 or 2 of you who do know who you are, you are very behind, right? And I don't know if you could evaluate this well. 3 is there's a handful of like these mid-tier companies that are probably acquirable, but that's purely because it's a business model that may not itself want to IPO. Like a good example of those, Chris, you and I are both familiar with them, is like Inca Digital, right? Which is an intelligence company. Like they literally do anti-financial crime and financial intelligence. I don't know how much public reporting they want to do. So that makes sense for a private acquisition, but like that's not most protocols, which either don't have revenue or have complicated user bases of tokens. That's not the IPO crowd. So like my one pump the brakes on the M&A thing is there may be like at best low tens of companies that are acquirable, like functionally.
I also think, also to your point about that big TradFi making these acquisitions, and this is entirely anecdotal, and I will not name names, but I got into the partnership level of one of these companies recently, and I think we're still underestimating the degree of reticence amongst 30% or more of some of these senior. And by the way, these are not like 80-year-old guys, curmudgeonly guys. These are like 50-year-old guys who have put it on public record over the last 7 to 10 years that they think crypto is bullshit. And it's incredibly embarrassing. So I was asked recently, like, what do you think about where's crypto skepticism going? I don't think there's crypto skepticism anymore. I think there's crypto resentment. So you're this guy, you're this incredibly powerful partner at XYZ. You are not just quietly shitting on crypto. You have been very, very, very public about it. To turn around at this stage of your career and greenlight a major acquisition, empower that team. By the way, Chris, the team you mentioned, and I think it was awesome, but they're there. They're at every day. They're just impotent. They're just stuck in a corner somewhere with no real power. To elevate that team to take over a P&L, to greenlight an acquisition, it's to admit that you are not just wrong, you are catastrophically wrong. And if I'm that guy and I'm a senior partner in one of these firms, 53 to 57 years old, you know what? I'm going to retire in 3 to 5 years. I'm going to just say this is bullshit for the next 5 years until I'm out and let that next generation deal with it because it's embarrassing to admit it. I think we dramatically underestimate the degree of reticence that still exists. And that's why I don't think we'll see a major bank acquisition.
And by the way, the number of boards who are going to be willing to accurately like police that behavior and fire that person and replace them with somebody who will do the right thing is very low. Maybe not zero. There probably will be, actually, here's a prediction that I didn't intend to make. There will probably be 1 or 2 big blowouts where management or a board gets forced out by activist investors over things like this over the next year. Because if you're somebody who's been at the forefront on the technological front, you're still out there shitting all over this as like Citadel and like NASDAQ and NYSE and the CME are all going on chain. Like if I'm on the board, I'm asking a lot of questions. And if I start investing and taking board seats.
The other thing is like, when I was in Wall Street, also you remember BlackRock says jump, you say how high.
Yeah.
If they're going on chain, they're like, hey, you're settling with me on chain. I'm settling with you on chain. You pay me hundreds of billions of dollars every year to my bank. I do think what is consensus at this level, John, is going back to 2017 or whatever, blockchain, not Bitcoin. If you are saying I'm investing in infra, no problem. It's infra. Right. If you're saying I'm buying tokens, maybe we got to pause a little bit, but like that blockchain, not Bitcoin concept is alive and well in these boards and at that level, I believe.
But we saw, and against my point, which I'm asked, the rumor, but it's been a confirmed rumor that MasterCard's buying Zero Hash. And I think there'll be, I think that's fair. It's fair. I think I'm distinguishing some of these commercial companies from the investment banks, but and the DATS problem is going to be that a lot of them have very inexperienced boards, and they're going to be panicked, and their lawyers are telling them you're going to get sued, and so they're not going to want to sell at below stock price, which they'll have to do to get a deal done. And I think they're just going to lock up for the first 6 months of the year until activists, as Austin said, come in and force M&A activity.
I want to go back to something you said around staking doesn't pay the bills. It does if you're Tom Lee. He came out today. He said, I'm making $1 million a day on staking, right? So what does that mean? It means scale, right? And so if you are able to achieve that scale, then, it's the haves and have-nots, which is something that we see as markets mature. As markets mature, things scale. That's why, to me, it's a no-brainer that consolidation is going to happen in 26, particularly amongst the DATs.
All right. So before we run out of time here, since we should do at least one prediction, I'll give a prediction that I think, again, will enrage everybody. I think the Democrats will win the House in 2026, and I think they will immediately regret it because it will probably tank them for the presidency in 2028. back to the financial nihilism components. The thermostatic effect in politics is getting stronger over time. That is to say, voters are pissed and there's major intergenerational warfare, and you do not want to be the main character right now. The easiest way to win is to be an outsider. And so I think the Democrats taking the House, getting on the main stage, pushing a bunch of their priorities are only going to piss people off and actually make people hate them too. The reality is voters are not happy with either of the major political parties, and the best thing you can do to be popular right now is stay off the stage.
I agree that there's no short-term political solution that can solve the problems that are enraging most Americans, particularly around inflation, particularly around affordability. It does appear that the short-term political actions will exacerbate those issues. And whereas before, I think you could spend your way into a good stock market and mollify people, I think those days are gone. And so it's damned if you do, damned if you don't. So I agree that whoever's in power is gonna have the target on their back. And I don't think there's any right. As Lynn Alden always says, there's no way to stop the train. I think both economically, but also culturally. Not to sound too pessimistic, but I do think we will be I think the U.S. will be, as a society, will be further fractured at the end of 2026 than it is now. I'm hopeful eventually there's a turnaround, but I tend to agree, and that kind of plays into my belief that altcoins and other types of idiosyncratic assets will go up as people just make that what the hell trade. But I tend to agree things are looking worse, not better on that front.
That sounds to me like it's going to be a really good season for prediction markets.
Yes.
Oh, I think prediction markets are going to septuple. And I think on-chain lending and prediction markets will both 5x to 10x.
Amen.
People will want to take leverage, to take risk, and people are going to want to bet on absolutely everything. It's not, I just think gambling, I'm going to that, but they're going to want to make a prediction on almost everything.
Lending has to come back. What about NFTs? Are they coming back next year?
So I'm going to say something really outside the box on NFTs. I actually think NFTs are going to turn out to be incredibly important, but not in the way they were originally designed.
Yeah,
I think where they will be important is tracking ownership of things that are currently on either broken, crappy ledgers or things that are not currently ledgered, right? Like if we could just create an NFT for all the cars in America and track those, or like, let's get into luxury good markets and things like that. There's a lot of value to be unlocked there with tokens that are unique and only like transferable in the right circumstances. I just think the initial wave of, hey, we're going to produce programmatic digital art. It's like, guys, those are JPEGs. That's very easy.
That was silly.
Yeah.
I think entertainers, sports teams, venues will start to figure out how to monetize the economic and data relationship with their fans via NFTs better. I think they experimented a bit before. I know like a buddy of mine, Imran Ahmed, who runs this company called The Business of Fashion. It's an extremely influential fashion company. They're going to figure it out. There's ways of it's provenance, which is important. It's data and communication with your fan base, which is important. And then it's that ephemeral, like, I own this thing that Taylor Swift endorses thing, which my daughters love. So no one's kind of got it yet, but it's just so obviously there that it's a great way to engage with your fan base and extract information and provide value back in community. So I think whether it's a sports team or entertainer, I think someone will crack the NFT code and figure out how to make it really, I wouldn't say useful, but really desirable.
There's a whole different layer too to this, right? Which is like, God, who is it? I think it's the state of California is putting like driver's license information on Avalanche as an NFT, right? Like, these are just in some ways property records, guys. Right? Like, let's stop overcomplicating it.
I agree. Yeah, I think there's some value in social graphing as well, right? So as certain people have certain types of assets in their wallets, it's going to be very valuable data for introducing other types of things that are similar to people of that data set, right? Like punk holders, penguin holders. That's what we're looking at today. In the future, it's like, oh wow, this wallet has X, Y, and Z. I think they would like for me to sell them or airdrop this. But maybe that's privacy.
I was in conversations with a NFL team, I'm sorry, a sports team a long time ago, and this idea they put in my head of, okay, you get your ticket stub, which is your NFT, fine, whatever. It's maybe it's collectible, but you could program in effectively a lottery mechanism. And so let's use soccer, for example. If you do certain things, that if you use that NFT in certain ways, it stays active and it goes off, and Messi tweets out your name or calls your phone. Who the hell knows? But some engagement component can be written into the contract, and that's extraordinary. That takes entertainment, customer or fan dynamic from static to dynamic over time. And look, I don't give a shit about that stuff, but there's hundreds of millions of people who really do, and they will figure out a way to engage you in your off time with that brand.
It also does the most valuable thing at crypto, which is compressing the intermediary stack, right? Like, we're going to now live in a world where creator, team, company has a direct relationship to the customer on the other side of things without like 3 layers of intermediation.
It's Patton Oswalt, my favorite comedian. It's Patton Oswalt. I buy his tickets through his website now because he realized he was big enough to mark. I follow his Twitter account. I'm going to be in Brooklyn. He was in Brooklyn a couple of months ago, and I bought the ticket directly from Patton Oswalt. It was demonstrably cheaper. I'm sure he's making a shitload more money, and everybody wins.
Feels like a business Coinbase could get into, John.
I think, well, we're doing everything. We're updating the whole system. So everything.
Yeah. All right. Well, I was going to say, let me throw this to you two if you have one more prediction you want to throw out, since we're slightly over time, and then we will end up calling it.
So hacking aside, I don't think there's going to be another big blow up in 2026. I don't think there'll be a big crypto bankruptcy, insolvency. I have come to the point where I'm so annoyed. Every time there's a volatility move in price, Twitter goes nuts with like these nebulous, some Asian hedge fund blew up, or a big bank couldn't make their silver margin calls. It's a great way to know who's a non-serious person. Like, look, in the immediate aftermath of a blow up, it's a possibility. But like a week later, if they're still saying there's some big unknown, that's not how these things work. The rumor mill starts immediately. Insolvencies happen right away. I think the probability of a major insolvency, non-hacking related insolvency, has gone way down. I think October 10th scared the shit out of people. I think they de-risked. I think there wasn't a blow up because they weren't over-levered. They might have been a little too much levered, and they took down a risk, and that's what you're seeing now with reduction in liquidity. But I think the major players have learned their lesson, and I don't think we're going to have an FTX style blow up in 2026.
That's one of the reasons they're coming on shore, John. Right? As they come on shore, they're going to avoid all the ADL shenanigans, and that's why I think that's going to be rocket fuel this year with derivatives. Why would I go unregulated if I can go regulated now that I'm allowed to do it? That's where liquidity is going to move. My last one, Austin, Bitcoin and Ethereum hit all-time highs in 26.
I could totally see that. I could totally see that. But I want to pile on with the point to John here. If there is a major failure of something in crypto in 2026, one, it's going to be a stable coin. And two, which people are really not expecting, it will be because a bank failed where the stable coin held their money. That will be TradFi blowing up something in crypto, not the other way around. People think the systemic risk goes from stablecoin to TradFi. It goes from a bank to a stable.
Couldn't agree more. There's been 600 bank failures in the last 5 years, and there's a very high chance there being more. And if there's ubiquitous stablecoin creation, I think it's almost impossible there won't be a bank failure cause stablecoin failure.
Yes. If anybody from House or Senate financial services are listening to this, remember, you have to protect stablecoins from the banks.
And crypto will get blamed.
Yes.
This was fun, guys.
Yeah.
You can try back.
And if I'm wrong and aliens are confirmed, we can invite an alien.
I was going to say you could just blame the aliens for controlling you to make the prediction to disguise the fact that they were real.
Right. This was great, guys. I appreciate my
Professor's definitely not from Earth. All right, guys. Good to see you.
I see how it is. All right. Thank you, everybody. Thank you for joining us for this episode of Bits Bips. Happy New Year. We'll be back in 1 week to discuss more about how the worlds of crypto and macro are colliding. Until then, stay safe out there.